What's good, everyone? Max here, Wealthier by the day 16. I got three topics I'm going to cover. First, before I get into it, I'm not a financial professional. This is not investment advice, not personal finance advice. I'm just thinking, I'm just spitballing. This is for entertainment purposes only. Three topics. Let's jump into it. Like, comment, subscribe, all that good stuff. First, we have two dividend stocks that I think personally are great buys that I will myself be purchasing with whatever leftover money I have. Two companies, and it's all on the whiteboard here. I thought this would be a nice little touch, and plus it was easy to get my thoughts down. So those two companies, I'll just spoil it right now: ticker symbol C and ticker symbol BAC. That's Citigroup and Bank of America stock. Both have pretty good dividend yields and some other good fundamentals that I like. We'll get into that a little bit more later. The second thing we're going to talk about is investing $15,000 a year if you want to retire on time, and we'll kind of go into some of the parameters and some of the figures and variables you can play around with as far as how you could retire earlier or maybe what would cause you to retire a little bit later. The third thing we're going to talk about is how you can earn $500,000 a year. Spoiler alert, you have to own your own business. If you want to make a lot of money, you have to own your own business, kind of, period. There are professions that pay ridiculous sums of money. There are, but the vast majority of people that make tons of money and income every year, it's income being earned through a business for the most part. So let's get into the first point. Again, please like, comment, subscribe. I'm making one of these videos every day. I'm trying to figure out new topics. So let me know what you would like to hear about. I'm trying to get as creative as possible and also kind of like trying to figure out what people actually respond well to so I can keep talking about it more in depth. Any feedback you have helps a ton. Let's get into it. So the first thing, two dividend stocks to buy, like I said, Citigroup and Bank of America stock. We'll talk about Bank of America first. Bank of America has a 3.75% dividend yield and has a pretty good dividend payout history. Uh, Bank of America has a 31% net income margin, which is insane. That's the kind of company Warren Buffett looks at. Warren Buffett likes to look at companies typically that have a 20, 25, 30% profit margin, net income margin, because super high profit margins just ensure that there's more and more money, cash being pumped through the business. It just makes sense. You want to invest in companies that have high net income margins because those are typically very efficient companies. Not only companies that have high net income margins, but industries or sectors where that's something you can identify. The energy sector is another place where, I mean, you'll see some ridiculous income margins from companies like Occidental Petroleum or Chevron or ExxonMobil. And again, these are companies and sectors or industries that Warren Buffett just buys up like crazy because they literally just print cash. It's insane. So Bank of America, 31% net income margin, 0.77 price to book ratio, meaning that Bank of America, essentially their book value is higher than their share price, basically meaning that there's good value there. Like you'd be getting Bank of America at a cheap price for where it's at. So you're getting a lot of value out of that, and the chances are that you'll turn a greater profit yourself by buying Bank of America, because I think right now it's at like 25 something dollars. So by buying the share at like $25 versus like $35, where the price to book ratio is going to be closer to one, it means you're giving yourself really good potential to make money on capital appreciation, make money on like the stock price essentially going up, which is what you want to look for, which price to book ratio really gives you a good idea of that. PE ratio can also give you a good idea of price to sales. Price to book has historically been the marker of cheapness when it comes to stocks. I always look at price to book ratio. It's the that fundamental like valuation variable that I like the most personally, or ratio, I guess you would say. And the last thing I want to point out, Bank of America has $1.02 trillion in cash, which is insane. They have $1 trillion in cash, which they do have some debt. I don't have the figure myself, and it's like 300 to 500 billion dollars worth of debt. But when you look at that amount of cash, I mean, that's another thing you want to look for in a business is how much cash do they have on hand, how much debt do they have. Like Bank of America could pay all of its debt off right now with the amount of cash it has and still have hundreds of billions of dollars of cash left over, which that is what I personally would want to invest in a business. That's very reassuring to me. Right now, they are having cash flow problems, and I was looking a little bit more into it. I believe it has to do with operating investments, something of that nature. You can find that if you look at like the cash flow statement. It takes a lot of research and digging, but you can figure it out. Now, why they're having those cash flow issues, I don't exactly know. I didn't dig that far. But considering that historically they have had positive cash flow and a pretty good amount of positive cash flow relative to the share price, and they have all this cash saved up, I don't feel nearly as worried that they are negative cash flow right now. If they didn't have any cash, that would be a different story. Maybe they would have to take on a ton of debt to get money in the short term, since they didn't have any cash. But they do have a ton of cash on hand, $1 trillion worth. That's also cash that could be paid out to you in the form of a dividend as an investor or reinvested back into the company, Bank of America. So that's a really big positive. Something I knew at one point, but I haven't been looking at that as much lately. So I saw that and I was like, okay, that's a good thing to bring up. So that's something to look at. Look how much cash a company has, how much debt they have, all that kind of stuff. There's a million things you can look at when assessing a company. And depending on the industry and the sector and kind of what you're looking for, you're going to look at different qualities. But these 1, 2, 3, 4 right here are 4 that I found pretty interesting and I thought made a pretty good case for buying Bank of America. The next is Citigroup stock. Citigroup has a 5.4% dividend yield, a 0.39 price to book ratio, meaning they are incredibly undervalued. 0.39 is super low. I mean, that's super low. And they also have $995 billion worth of cash. So they almost have $1 trillion, similar to Bank of America. Citigroup runs at a 19% net income margin, which is not nearly as good as Bank of America. Obviously, that's 12% less. So suggesting they're not as efficient with the way they handle their money or their business. However, given the price to book ratio, plus the dividend yield and all that cash, it's still good. I mean, I still like it. I mean, 19% is maybe not as ideal as 20, 25, 30%, but 19% is not bad either. Banking in general tend to have relatively high net income margins, but essentially it must have to do with the business itself. I don't know a ton about banking, but it's obviously very profitable. So these are 2 stocks that I would definitely look into if you're a dividend investor specifically. I mean, even if you're just investing purely in individual stocks for capital appreciation or total return, same deal. I would look at both of these stocks, maybe do a little bit deeper dive. Both of these companies have more cash than short and long-term debt combined. They have good price to book ratios, solid profit margins. Both are cash flow negative right now because of, and you can check the cash flow statement, but having to do with operating investment activity, which I still need to dig a little deeper into that and see why that is. Not a huge red flag to me from what I could find, given all these other positive factors. Their valuation in general is incredibly low. Not a ton of growth in both of these companies, but with values like this, there doesn't need to be a lot of business growth, because right now the companies are so undervalued that you can buy these companies now, hold on to them for a while, and once the market corrects itself and people kind of come to their senses and earnings are going better than expected, these share prices are going to shoot up, plus you got that dividend. So definitely 2 stocks to look into. Again, not a recommendation, not advice, but 2 stocks I am definitely looking into myself and buying. Citigroup, in fact, is my largest individual stock position. So looking to add some more Bank of America. These are 2 stocks that Warren Buffett loves as well. So you can't go wrong if that's confirmation bias essentially, but Warren Buffett is the GOAT. The second is basically investing $15,000 a year at least to retire on time. Now that'd be 35 years essentially to save up $2 million in investment accounts. 35 years, that would mean you'd have to start investing when you're like 18, 20, when you just become an adult, which for some people, that's not going to be that far off. I mean, a lot of people in the United States start working, I'd say anywhere between 18 and 22, 23. So these figures aren't that far off. And $15,000 a year, I looked it up. The median household income right now in the United States is $75,000. So I just took 20% of $75,000. Obviously, if you're that young, maybe you're not making $75,000. I think I made close to that amount when I first started working. Actually, maybe it was closer to like mid to high 60s. I was also working in the construction industry as a field engineer, so automatically the pay scale is a little bit higher. I recommend everyone getting into the, if you're looking for a job and you're pretty indifferent, get into the construction industry. Tons of money going around. Construction projects range from hundreds of thousands of dollars to thousands of or hundreds of thousands of millions of dollars. Like, oh, come on, cat. It's pretty insane. So yeah, just a tangent, but yeah, look in construction industry, utility space, great place to work. Anyways, so $15,000 a year invested, that'd be 1,250 dollars a month, which for some people is probably realistic. Other people, maybe it's not as realistic. But again, this is on average $15,000 a year. You could always ramp that number up. As I always kind of say, do what you can. Something is better than nothing. So invest what you can now and continue to try to ramp up the amount of money you're investing. And over time, you'll hit this figure and likely exceed it. Like, very likely you'll exceed it. And that's 35 years to get to approximately $2 million with like a 6 to 7, 8% return on investment. Kitty. This cat's playing with his little food dish. You probably can't hear it because of the mic. It's driving me crazy. Anyways, so that's the second point. Basically, like I've talked about in past videos, try to invest like 20% of your income. That's a pretty good, pretty reasonable amount of money, if not more. I mean, 25%, 30 is obviously better, but do what you can. And over time, your income should be going up. I mean, everyone, as you get older, you just earn more money. You have more experience in the job market. You get smarter, all these good things. So that should be feasible. Probably a good place to shoot for is like $15,000 a year to start. Yeah, do what you can. That's all you can do. I mean, when it comes to investing, sometimes you're going to be able to invest more. Sometimes it's going to be a little less. Over time, as long as it's trending in the right direction, that's what we're looking for. Let's move on to the third point. How do you earn $500,000 a year? So I just threw this figure out there, $500,000 a year, just kind of a random figure. But essentially, if you can start your own business and make it through, I don't know, 5, 10, 15, 20 years of building that business, you should easily be able to make $500,000 a year. I personally know people that own very profitable, successful businesses, and they easily make $500,000 a year. And these are very small operations. Yes, the margins are really good because using something like the 80-20 principle or rule, they were able to figure out, wow, this work is really profitable and not as time consuming, and we're incredibly efficient at it. We are going to take this market and we're going to go all in, basically. Come on, kitty. No. Oh, this cat, I'm telling you, he loves me. Kitty, come on. No. Get off the table. Damn cat. Anyways, so yeah, I mean, really, if the point of this bullet point, the third point, is just to kind of, it goes to show, if you want to make a ton of money and build your investments, starting a business is the best way to do that. Now, the feasibility of that's where the issue lies. If you're super young and you're hungry and you want to be an entrepreneur, that now is the time to do it. While you don't have kids, you don't have a wife, and of course, hey, kitty, no. Oh my goodness. Of course, I'm speaking more to the young men because most of the vast majority of my demographic is young men from what I've seen, or men in their kind of 20s, 30s, maybe 40s. So I'm sorry if this message is somewhat biased. I'm just speaking to the audience that I analytically have seen. But basically, do it while you can. I almost wish I could go back and start a business. I'm relatively happy with my career. I make pretty good money and I learn a lot and I get to work with awesome people. But at the end of the day, I really want to own my own business at the end of the day. So I'm working on it on the side. I'm doing what I can. But if you have the chance to do that, by all means, take advantage of the time and energy you have, and maybe some of the you don't have some of the obligations and responsibilities that you're probably going to have in a few years. So take advantage of it, because that's how you make a ton of money. Just, I mean, look at the people that are the top earners in the world. They're business owners, right? They create products, they have services, they build infrastructure. Like, that's, if you want to make a ton of money, you got to do what most people don't do, and that means running a business. And from what I've heard, it's incredibly challenging and difficult and very sketchy at times, because you don't have that kind of safety net that earned income gives you, and that reliable source of income. But it's like high risk, high reward. If you can figure it out and be really efficient at it and do it better than most, the earning potential, the sky's the limit. You can, depending on what you're doing, if you can scale it really well, sky's the limit. I mean, you can be a multimillionaire by the time you're 30, 40, right? So if you want to earn a ton of money, start a business. And if you're really busy with life and other obligations, do what you can on the side. That's what I do. I try to make every minute count that I have. You got to rest, you got to enjoy your life. But for the most part, I try to build whatever I can when I'm not busy with my job or my family. Everything else, tiny bit of time, is entertainment and relaxation. The vast majority of my time, I'm on the side working on things, trying to build things that will be fruitful in the future. So anyways, those are the 3 points of today. First point was 2 dividend stocks that I personally am going to buy. That's Citigroup and Bank of America. Both very undervalued, very profitable, have a ton of cash flow negative at the moment, but they should be able to turn it all around. And I think these are pretty safe bets for good capital appreciation and consistent dividends in the future. I like both of these. Second point was invest $15,000 a year if you're in your 20s to retire on time, i.e. 55 years old. Third point was how you can earn $500,000 a year. Again, that's just kind of a rough figure, but bottom line is own your own business, get creative, figure out what you like doing, figure out what you're good at. Sometimes that's the same thing. Sometimes that's not always the same thing. You may love the business you start. You may not like it. You may be indifferent, just like having a job. So think about it. Anyways, I'm Max. This is Wealthier by the Day, day 16. Thanks for tuning into the video. Please like, comment, subscribe. I will catch you all in the next one tomorrow. Late.